Seeking solid guidance on how to manage your finances? It is okay to seek financial advice online or from dependable friends. However, there is a danger since finance is vast, and you may get poor counsel. In this situation, a financial advisor may assist you in managing your financial demands, such as budgeting and investing, to build a diverse financial portfolio. Therefore, today's video will assist you in knowing how to choose a financial advisor. Let's get started. Number 5. Experience. When picking a financial advisor, the first thing you should think about is the potential advisor's expertise and professional background. It is essential to have sufficient expertise in the financial markets and with customers. Because you'll be entrusting your funds to the advisor, she or he should be well-versed in financial matters. Inquire about your potential advisor's approach to customers by asking for recommendations. Economic cycles, a formal education degree, certificate, or the most recent certifications in financial planning must be evident in their financial advisor career. Also keep in mind that the more experienced, the more likely you are to pay a hefty cost. The fees charged by financial advisors are complex, and we'll go through them shortly, so stay tuned. Number 4. Check professional license. In the USA, for example, financial advisors must pass the General Securities Representative exam, generally known as the Series 7, in order to sell securities. This examination covers all of the fundamental investing information and laws that financial advisors are required to know. Also available is the Series 63 license, where advisors are able to do business in different states. Financial advisors who desire to charge fees must also pass the Series 65 test. Be mindful of all these. Check for the right license pertaining to your country.
Will do.
Number 3. Professional fee. Among the numerous factors to consider here is how much time you anticipate the advisor spending with you. The charge is also dependent on the advisor's level of expertise, experience, and service quality. The advisor's pricing structure is important to know. It's critical to consider how this fits into your long-term plans as your portfolio expands. Your best option may not be every high-priced advisor on the market. Additionally, low-cost charge advisors may not be able to meet your expectations for service quality. A formal agreement between the advisor and the client will outline expectations for both parties, including the frequency of a full portfolio review, the alarms that will be set up for your portfolio statements, and more. Speaking of fees, our channel will not charge you for the financial information we provide. All you have to do now is to subscribe. Number 2. Profile of old clients. An advisor, like a doctor, has a specialty in the sort of customers they are most equipped to work with. If you want the greatest advice, you need to choose an advisor that has carved out their own specialty.
I'll keep that in mind.
Specializing in salary professionals, an advisor would have a greater grasp of their demands, frameworks for counseling, and flow of funds. Similarly, a financial advisor who specializes in working with retirees understands the need for a consistent cash flow in their client's portfolio. Nevertheless, what about a financial advisor who specializes in working with a billionaire? An article by U.S. News & World Report has more information on this, and we will gladly share it with you, so stay tuned. Number 1. Communication skills. To make matters more confusing, the industry employs a lot of jargon. A competent financial advisor should be able to communicate in a way that explains things clearly, with specific actions and procedures necessary in order to build confidence. Also, take note of sign language because it can travel with the speed of lightning. A good financial counselor should be able to communicate your financial situation to you in a way that is both understandable and impartial. As professional financial advisors, they should be patient enough to get to know you and your financial issues so that they can propose the best solutions. Now, listen to what these financial experts at J.P. Morgan say about communication.
So it really takes you talking to people and understanding different thoughts and needs.
What billionaires look for in a financial advisor. Investing objectives, such as maximizing returns while minimizing risk, as well as the teams of advisors selected to help investors achieve their goals, are as diverse as the investors themselves. Billionaires choose long-term investments like enterprises and major real estate initiatives, rather than short-term investments like stocks, bonds, and other assets that respond to increasing interest rates. Speaking to U.S. News and World Report, Matt Chansey, a certified financial planner, says billionaires don't invest for events such as buying a home, going to college, or retirement. They invest in such things as endowments with an investment mandate to stay invested and grow the assets over time while using some of the income for their lifestyle. Furthermore, high net worth customers and millionaires don't have access to products like private equity and venture capital that billionaires have. In one scenario, the stock and debt of mid-sized enterprises with significant growth rates and the ability to be bought by a publicly listed corporation may be obtained. Private market stock and debt investments may have far higher returns than public market investments, but Chansey says you have to be a qualified buyer to get into these markets. Billionaires are continuously searching for the greatest consultants in their respective professions in order to simplify these transactions. Also, Chansey observes that some families with $1 million or more in assets combine their assets into a single multifamily office. This is done in part so that the families can afford the most qualified financial advisors possible. According to him, if your family office is worth more than $500 million, you will be able to hire truly excellent professionals to work for you. But if your family office is worth more than multiple billions of dollars, you will have access to actual specialists. It is important to manage your funds since they determine your financial well-being. Financial advisors give you much-needed financial experience when it comes to managing your money, but they should be chosen carefully. Perhaps you do not trust anyone and you want to become a financial advisor yourself. Let no one stop you. If you don't know where to begin, our video on Financial Advisor Career Path, Becoming a Financial Advisor Tips 2022 will guide you.